probably will increase further, but it is that it will be a one-time increase. And, we've been very focused for all of this year at making sure that that's the case, and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be, a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think, we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be a one-time inflation. We understand fully this is a risk we have to monitor and ultimately manage.
With the stubborn services inflation, what are some of the things that the Fed could do to address that, and especially when we're seeing potentially labor supply challenges?
Sorry, say the first.
The stubborn services inflation that you mentioned.
Service inflation. Yeah. Well, again, the part of services inflation that isn't coming down as we would like it to is the non-market part of non-housing services. And overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed rather than actually paid is a big part. Modestly restrictive in money telling. So that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market.
Listen,
is because
what a piece of crap.
Fed policy is modestly restrictive.
Piece of crap.
That should also help get that.
Right here.
I want to say though,
that's what that is.
We're absolutely committed to returning inflation to 2%.
We've already rebounded almost all the way back.
Surveys or market pricing, you will see that.
We've already almost rebounded all the way back from the dump.
There should be no question that that's where we're going.
The problem is we keep on dumping and not getting above those previous support levels.
Great,
we keep on running back up and getting rejected.
So there's a big investment boom in AI infrastructure right now, as you know, and
it's not good at all.
Wondering if the existence of such a boom
we have already pretty much
would indicate that rates are not that restrictive after all.
We've almost already recovered from that dump.
Perhaps fuel an excess level of investment there, or
this market, man.
Market bubbles. How is the Fed thinking about
it? And it's one thing,
So I don't think that you're right. There are a lot of data centers being built and other investments being made around the country and around the world. And big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers.
I have nobody to blame but myself.
Is going to affect their businesses. So
for every single loss that I've ever had, I know what to do, what not to do. Just like putting in a position, long or short, before the FOMC is not a good idea. You're better off to wait until right after the FOMC and then assess the market and find an entry into a position, into a trade. And I know this.
Give us a sense, I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at to track inflation in the absence of government data? Thank you.
So it's a lot of things, and it doesn't replace government data, but all of these. I'll just mention some of the many names: Price Stats, Adobe, and others. For wage inflation, there's ADP data. On spending, you're going to ask about spending at some point. There are lots of other things that we look at, but it's many different sources, and again, including what we get out of the beige book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material
I keep telling myself I'm going to learn from my mistakes.
I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Continued shutdown.
How many of you blame the government shutdown for the...
Howard Schneider with Reuters, thank you. I just wanted you to elaborate a little bit on what you said a moment ago about the continued shutdown, making it more difficult to make a move in December. Look
at this, man. Look at this.
Make you more
We
cautious.
dropped to
And
109K.
to the degree you
Bitcoin's
are
already back at
relying on
111.
private data,
Somebody said it in the
it isn't
chat
the gold
earlier.
standard,
Somebody
that
said it
you're
earlier.
relying
They
on your
said,
own surveys of the base.
don't
But
worry,
you
give it
worry
time.
at some point
It's gonna be
you're
right back.
Have to start making policy by
typical
anecdote.
typical volatility, FOMC
This is
volatility.
a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in a fog? You slow down. So
My God,
that could or could
bro.
not. I don't know how that's
What
going
a
to play
piece
into
of
things.
crap.
We
Wick.
may get the data.
What a
come back,
trash
but
wick,
there's
bro.
a possibility that it
What
would
a
make sense to
trash,
be more cautious about it.
trash
I'm not,
wick.
Yeah, I'm not committing to that. I'm just saying it's certainly a possibility that you would say,
Oh my goodness.
we really can't see, so let's slow down.
As a follow-up in the debate in this meeting, we saw recently some pretty big layoff announcements coming
Trash,
from
bro.
Amazon
I
and
guarantee
others.
you.
Wondering if
Oh.
that figured into the discussion at all, that you're starting to see this tension between growth and employment starting to be resolved, to the detriment
Happens
of
to the
employment.
best of us, guys. Don't
And
worry.
secondly,
Don't worry. Don't let
some
these
of the
crypto
stress is
YouTubers
starting to
fool you,
appear
bro.
in the
Okay.
bottom spur of the K, as they call it.
Don't let these crypto
household,
YouTubers fool you,
health
man.
premiums that are gonna be
We all
possibly
lose
going up.
money.
Those are both things, that we're watching very, very, very carefully. To start with
Ben.
the layoffs, you're right. You see
Right.
a significant number of
Time to
companies
fly to the
either
moon now.
announcing that they are
Now.
not going to be doing much hiring
Now.
or actually doing layoffs.
Oh.
And much of the time they're talking about AI and what it can do. So we're watching that very carefully.
Bro's going through
And,
the most,
you know,
man. He
yes,
just
it could
lost cash for
absolutely have
days.
implications for job creation. We don't really see it in the initial claims data yet. Now,
History
it's not a
drops
surprise
says I
that,
lost
it
and made
takes some
back a
time
whole
for it to
account in
get
8
there.
hours,
We're
bro.
watching that really carefully. But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are, if you listen to the earnings calls or the reports of big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower-cost products, but that at the top, people are spending at the higher income and wealth, and so much anecdotal data on that, and so we think there's something there.
Thank you. Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction in rates is not a foregone conclusion. So in December, you said far from it. So if a cut might not be on the table for December because of lack of data, what does the other concerns then stem from? So if it's not lack of data as the reason December,
If there's no
is-
rate,
is
if there's
not a
no
foregone
cut in
conclusion,
December,
what other things could be the concern then?
Well, the perspectives of people on the committee that, we've now moved 150 basis points, and that we're down into, you're into that range between 3 and 4, where many estimates of the neutral rate live in that 3 to 4%.
Jonathan, yes,
So
we did
you're
get the
there
rate
now.
cut.
You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate, and that's you can argue these positions since it can't be directly observed, the neutral rate. So, I think for some part of the committee, it's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether in fact the growth, that the stronger growth that we're seeing is real. Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a
Deadwood,
more
what's going
downbeat
on, man?
read. So people just have, again, we've cut 50 more basis points in the last 2 meetings, and there's a sense like, from some, let's pause here, kind of thing, and a sense from others wanting to go ahead. But that's why I say differing views, strongly differing views.
So on that division, then you're talking about going forward. So what's more important in this division? Is it inflation risks? Is it employment risk? Or is there a deeper philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing to achieve our goals, maximum employment and stable prices. You have differences on how to do that. And as I mentioned, some of that is different forecasts, but a lot of it is also different risk aversions to the different variables, which is common through all Federal Reserves. People just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches you've been listening to from my colleagues. And so we're at a place now where we have in fact cut 2 more times. And we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think it would be. It's and again, you've seen it in the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants, and now I'm telling you that's what you can expect that in the minutes. And I'm just telling you that's what happened in the meeting.
Elizabeth. Thank you so much. Elizabeth Schulze with ABC News. What is your explanation for why the job market is weakening right now, and what will this rate cut do to improve the job market?
So I think there are 2 things affecting the job market, and one of them is just a dramatic reduction in the supply of new workers. And that's 2 things. That's declining labor force participation, which is a cyclical thing. And then there's declining immigration, which is just a big policy change that actually began in the last administration and it has been accelerated now. So a big part of the whole story is that supply side story. Okay. In addition, labor demand has declined, and the unemployment rate has gone down, meaning that demand for workers has gone down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand? And and I would just say, when you're in a situation where job creation, if you adjust for likely overcounting in the way that BLS does its work, is pretty close to 0. So maximum employment doesn't, on a sustainable basis, if you're creating 0 jobs, if it's in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last 2 meetings, that it was appropriate for us to react by supporting demand with our rates, and we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were, and that should help so that at least the labor market doesn't get worse. Though it's a complicated situation, and some people argue that this is supply and we really can't affect it much with our tools, but others argue, as I do, that there is an effect from demand and that we should use our tools to support the labor market when we see this happening.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects, but if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are 1/10 or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long at least this is the theory, this is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up, they'll just be at that level. And then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now. Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because, you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's, I think, a large part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even, and it's nice that, that prices are not going up as fast as they were, but they're still much higher than they were. And it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
Michael McKee from Bloomberg Television and Radio. Do you have any concerns that equity markets are or are close to being overvalued at this point?
We don't look at any one asset price and say, hey, that's wrong. It's not our job to do that. We look at the overall financial system, and we ask whether it's stable, whether it could withstand shocks, right? So, banks are well capitalized, while some households are clearly under stress. In the aggregate, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime auto, but nonetheless, in the aggregate, pretty good. You don't see too much leverage in the banking system or the financial system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not, it's not appropriate. We don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part of the AI of the data center story. I think people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about about 25 basis points here or there. We use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here by lowering rates at the margin, that will support demand, and that will support more hiring. And that's why we do it. Now, no 25 basis point or even 50 basis point hike is going to be a dispositive thing, but ultimately, lower rates will support more demand, and that'll support hiring over time. And of course, we also have to be careful about this, which is what we've been doing, because we know where inflation is, and we know that, I've told you the story. It's a complicated story, but this is the best assessment that we can make. Because there's uncertainty around inflation and the path ahead for inflation, that's why the pace we're going has been a careful one.
Victoria.
Hi, Victoria Guida from Politico. On AI, I'm just wondering, it seems like a lot of the economic growth that we've been seeing is fed by investments in AI. So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different in the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s and the dot-com, these are ideas rather than companies, and so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and it looks like they have business models, and and profits and that kind of thing. So it's really a different thing. You know, the investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been, you know, is much bigger than that and has been growing and has defied a lot of, you know, negative forecasts, continuing to do so this year. Consumers are still spending. Now, it may be mostly higher-end consumers or maybe skewed that way. But the consumer is spending, and that's a big chunk of what's going on in the economy, substantially bigger than AI. You could point to growth. I mean, actually, you may be growth as opposed to level, but consumer spending is a much big part of the economy.
And why do you think that the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened is that the supply of workers has dropped very sharply due to mainly immigration, but also lower labor force participation. So, and that means there's less need for new jobs because there isn't this flow into the pool of labor that, you know, where people need jobs because there aren't those people now. So there's not a supply of workers showing up for jobs. In addition, demand has also gone down, and so has labor force participation has declined, which is more of a sign, in this case, of demand as well as trend. So I think you're seeing some softening. You know, the economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown. And of course that will reverse. But, you know, you still got the economy growing at a moderate pace.
Andrew.
Andrew Ackerman with the with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. You know, it'll probably be argued both ways, right? But I've said a couple times here that, you know, if you really aren't getting information you really don't know, and the economy looks like it's solid and stable and hasn't really changed, you know, there will be an argument. I don't know how persuasive it will be, but there will be an argument that, you know, you slow down when you can't see as far ahead. Others may argue, I mean, I'm not sure where this argument will come, but you're perfectly right that you could also argue, well, things haven't really changed, but you might not know that, you know. So I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting we're getting, you know, a better flow of data. But if we're going to have to do our jobs one way or the other.
Okay. I also just wanted to ask a FinReg question. I think several years ago you said the overall amount of capital in the system was about right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies, and I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that in 2020, was about right. And of course, there's been much capital added since then through various mechanisms. But you know, I look forward to I know those discussions are really just getting going. They haven't come to the point where they're, you know, where they're got a whole plan and that kind of thing. So I really don't have much to say on that.
Brian.
Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating, and who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor market?
So we do not see the weakness, as you put it, the weakness in the job market accelerating. I would say, then again, we didn't get the September employment report, payroll report, but we look at, you know, the unemployment insurance claims, initial claims are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really I mean, in no story, you can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is, or really any part of the economy is making a significant deterioration. Don't see that. You see more things like I mentioned, though, which is that you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up over a number of years. There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers. The layoff numbers have not gone up, but job creation is very low. And the job finding rate for people who are unemployed is very low. But the unemployment rate is very low as well. 4.3% is a low unemployment rate.
So as you make these cuts, is it the lower income workers that you're thinking about, or those who might have their jobs automated? Is there a particular
that we're
section
thinking
of
of?
the labor market that you're particularly?
So we can't, our tools don't allow us to target any demographic or any income level and that kind of thing. I do think that people, we saw this during the global financial crisis and the long recovery. If you have a long period of very strong labor market conditions, it benefits people at the lower end the most. The last 2 or 3 years of that long expansion, people at the lower part of the income spectrum were getting the biggest benefits, and lots of things were happening in that space demographically, which were very constructive. And we're not at that place right now. But so a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people, along with keeping prices stable. Those two things. I mean, inflation also hurts people on fixed income more than other people.
It's going to take every bit of 200X just to get back the losses,
As you know, the 12 Reserve Bank president's terms are up for renewal at the end of February.
One thing I
I'm
won't
wondering
do
if you can give us a timeline for when the board will
lie to
consider
you,
those
okay?
reappointments and whether we can expect
But
everyone to be
I did
re-upped
take
or if we can
$100,
expect
and I
some
did this
changes.
once and
So
one
it's a
time only, but I
process
took
that we go through
$100.
under the law. The way the law works is
400X. I took $100 with a $500 account, put a $100 margin on a 400X ETH trade, and I flipped that shit in a few minutes, man. I've done it with Dogecoin too, man. On weeks, I did it a few times with Dogecoin. Flipped $100 into $1,000 within minutes, bro. Minutes. Took $100, and within minutes, had 1,000. And of course, if I didn't click freaking close immediately, it would have been gone in a heartbeat. So it's extremely crazy. Yes, I'm nuts. It's extremely crazy, extremely risky. It's pretty much gambling. Okay, don't do it. Just don't do it. Don't ever do it. Don't ever use 400X leverage unless you're just ready to just lose your money. Okay? I mean, you literally, if you're like me and you're trying to 10X $100, on the regular, because that's what you need. That's what you have to have, man. You need $1,000 by the second, It's like rent's due, bro. What are you supposed to do? Rent is due, man. So what else do you do except 200X or 400X? What else do you do?
Go all in,
that
bro.
makes a lot of sense to me. All of these people are,
Even Jerome Powell said it makes a lot of sense to him. Even Jerome Powell says it makes a lot of sense.
And, it's an honor to work among people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time when we're making quite difficult judgments in real time, and I believe we'll get through this.
I know.
And I
JJ,
think we've done sort of the right thing so far this year. I think we were.
Sometimes it's just what you got to do.
Careful about this.
And
I think it would not be appropriate to just ignore or assume away the inflation issue. At the same
Richard
time,
K., if I
the
cheered
risk
you up, the mission is
of higher, more
accomplished.
persistent inflation has declined significantly since April. And
I can't believe Jerome Powell is still
I'll-
speaking.
if we-
This is still
if we do
live,
wind
bro.
up resuming rate cuts at some point, we will.
This
some
guy's got
point.
more freaking
You know, I think we're trying to get
more
to the
stamina
80s
than me,
cycle
bro.
with the labor market in a good place and with inflation, you know, on its way to 2% or at 2%. So that's all we're trying to do, and we're doing it under, you know, quite challenging circumstances and doing the best we can.
We'll go to Jennifer for the last one.
I agree with you guys, man. Leverage
Thank you
is.
so much, Chair Powell. Jennifer
gambling.
Schonberger with Yahoo Finance. Both regional and large banks have taken losses on loans given delinquencies on subprime auto loans. JP Morgan CEO Jamie Dimon warned, when you see one cockroach, there may be more likely. I'm curious how the Fed is looking at these loan losses and if it poses
Bro, I don't
risks
know. He's
to the
still
financial
going, though.
system or the outlook.
You know
for
what's
the economy.
crazy?
Is it a warning
This
sign?
mother-loving
So,
piece of
you
shit.
know,
I'm just
we're
gonna
obviously
say
watch
it.
these things very carefully. Credit
This damn
conditions
piece
very
of shit.
carefully. You're right. You've seen rising defaults
Oh.
in subprime credit for some time now, and now you've seen a
You
number
mother-
of subprime credit, automobile
Look
credit.
at you dropping to
Institutions
18.7.
having significant
18.7 and you're
losses, some
already
of the
back at
losses are now
19.4,
showing
you
up on
piece
the
of loving
books of
crap.
banks. You know, we're looking at it carefully.
Do you guys ever
We're
talk
paying
to the
close
charts like
attention.
this?
Yep.
I don't see at this
I
point.
hope I'm not. I hope I'm not
broader
alone,
credit
man. I'm not
issue.
the only
It
one that
doesn't
looks
seem to
crazy,
be
right? At least I'm not here doing
something
it on a
that-
live
that
stream.
has, very broad
Look, bro,
applications
history
across
drops. I
different
be out here
institutions.
doing the
But,
most, okay?
You know, we're going to be.
I
we're gonna
don't-
be monitoring
I don't
this
ever use
quite
isolated.
carefully
I always
and,
use
and
cross.
making sure that that is the case.
And then
Oh,
separately, many, you yourself have said that we're in a bifurcated economy right
Oh,
now
man.
with high
Just-
net worth
just
individuals
freaking
continuing
just
to spend,
get
while
it from
lower
me,
income pulling
you
back.
piece of crap.
How much of consumer spending continuing
Richard K,
hinges on the
you
stock
shout and scream
market
at the charts
remaining
too, man?
strong? In some
Me
odd
too,
way,
bro.
does the market
On the
help keep
regular.
the economy
On the
buoyant?
regular. Today
So
is one of
there
them
is some-
days, bro.
There's some relationship there, but remember, the more wealth someone has, the
I
lower
might
an
need
additional
treatment.
dollar of wealth matters. So your marginal propensity to consume
Yasuki, I try not to,
declines
man.
quite
I
dramatically
really
as
do
you
try. I
reach-
try not
as
to
you reach
cuss.
levels of stock market wealth. So, you know, the stock market,
But
it would affect
Oh, it's a
spending
piece
if
of
the
crap.
stock market went down, but it wouldn't drop. It wouldn't drop sharply unless there were quite a sharp drop in the, you know, in the stock market. People at the lower end of income and wealth have a much higher marginal propensity to consume.
good job, Malik.
Of an incremental dollar of income or wealth, but they
GGs.
don't have the stock market wealth. So I think it's certainly a factor supporting consumption right now.
You might need an alcohol boost,
but-
bro. After today's
And you would
FOMC,
see it if you saw a material correction.
I might need a whole bottle.
In spending, but it wouldn't be. you shouldn't
Trading
think
has
that
aged
it'll,
me
you know,
prematurely
dollar
by
for
10
dollar
years.
stop
It's
consumption.
okay,
That
because
would-
once we get to that
Thanks very
ultimate
much.
goal, once we get to that ultimate goal, we'll have enough money to reverse all the aging. You know? Oh, it's over. Thank goodness, bro. We can all go home now. Bro. I tell you what a piece of crap. What a big giant piece of crap. I almost want a revenge trade right now. I'm thinking about doing it, man. Gosh dang it, you mother piece of crap. Don't you ever want to just want to backhand the hell out of somebody? Trading makes you want to just backhand the hell out of somebody. Bro, I really do appreciate all of you guys showing up today. Deadwood, man, thank you, bro. As always, I appreciate you very much, man. 14,000 views today. You know, it's not 44,000 like our last FOMC. But Dankening says I'm being a bad example. Oh well, I'm sorry. I didn't know that my duty up here is to be a good example for you, bro. Look, I have trouble being a good example for myself, okay? Give me a break. Powell is slightly dovish. Yeah. maybe for the first timer. Oh no, listen, I'm going to tell everybody for the first time, if you're getting into crypto and you think that you're going to get on here and trade with leverage and just be, and just, yeah, no. I'll be the first one to be honest with people. But is there something wrong with wanting to try my luck with 75x cross margin? Is there something wrong with this? Average Joe's United, baby. That's right. That's right. Wealth Celestine, what's going on? Welcome to the stream, bro. Gosh dang. What's wrong with it, man? What do you mean? Can a brother not have some fun? Listen, I've had it up to here, bro. Like a few good trades, man. But all it takes is one bad trade, man, to wipe out 10 good trades. But vice versa, the same can go for the other way, you know. All it takes is one good trade to wipe out a bunch of bad trades. But damn it, you know what is the saying? It's whenever you've after like 3 or 4 bad trades, you walk away, call it quits, be done for the day, right? Be done. If you've had 2 or 3 bad trades, that's it. No more. Too many degenerate gamblers in crypto. You know, I would agree with that. Almost agree with you, bro. Keith, I almost agree with you. But are you not a degenerate gambler yourself? Keith, don't lie to the people now. Come on, Keith. Come on, Keith. Come on now, don't lie to the people, Keith. You ain't never stepped foot in a casino, bro. You ain't never hit up the roulette table. Come on, Keith. Come on, Keith. Damn, you missing out, bro. You missing out. I'll tell you what, you will never have more fun losing money. Oh gosh, catching that stupid wick. Catching that stupid candle, man. See, wait for the FOMC. Okay, for future reference, folks. No risk, right? Wealth Celestine, exactly my point. No risk, no Ferrari, no Lambo. Okay. Look, man. Future reference, let's all just remind ourselves that on FOMC day, you wait for the FOMC dump. And honestly, who could have guessed that 18,792 would have been the bottom, right? Who could have guessed that? Nobody. But I would have risked it. I didn't have the account ready to do so, but I still might, depending on where we go. I would have, Richard. I would have, bro. Listen, you know how I made like thousands of dollars in minutes with 400x leverage? By doing crazy shit. Literally by doing crazy shit. It's unorthodox. It's not your typical crypto trader. But yes. Now, unfortunately, BitFi doesn't offer 400x leverage. BitFi only offers 75x leverage on Dogecoin and only up to 200x leverage on Bitcoin and Ethereum on BitFi. So we were over on weeks trading whenever we were using 400x leverage. I'll be honest, I like it. The 400x leverage, man. If you're trading with if you're trading with low fees at 400x leverage, and you catch a couple of 5-minute candles, you freaking. It's good gains, man. It's good gains. It's easy losses, but it's good gains. But it also goes against everything that most people are going to tell you. But that's why I'm different, bro. I'm just saying. I've made a lot of money that way. I've lost a lot of money that way. You know, it's like anything. But it does keep it interesting. Look at that. Look at that. Look at that. MEXC, you know, I've been wanting to talk. I've had some people contact me from MEXC. I haven't partnered with MEXC yet. What is this music, bro? Not your average Joe crypto. Bro. Exactly. Oh my gosh, bro. I am so tempted if we go back below 19 cents. I will say, Bitcoin is still, even though we wicked below it, we're still above that support from over here and could still be putting in a reversal if we keep this higher low in and keep that support above 110K that we talked about previously. I mean, we could still get a reversal in here. Still at support. Ethereum still holding that key 3800 support. Really nothing has changed. Really nothing has changed. We had a flash dip. That's what I'm going to call it. A flash FOMC dip. Okay. As Jerome Powell was speaking, the market dipped. You got a little head and shoulders on the 1 minute here coming down on ETH, but I mean, other than that though, nothing has changed. Flash dip. Freaking Doge got hit the hardest and is already right back where it was at pre-FOMC. So again, nothing has changed. No, what has changed? Nothing really has changed except sentiment may have changed slightly, but overall we got the rate cuts that we expected, which is already priced in, but we also had kind of mixed signals on the December rate cuts and what to expect in December. So, you know, we'll see. Typical FOMC, right? What's up, Sky Lee?
Okay, I'm back.
Why does that happen? My microphone just randomly cuts out. I don't know why that happens. Still haven't figured it out. Maybe I won't ever figure it out. We are never giving up. Oh, we are never going up. Well, Keith, that's a good point, man. Thanks for saving my ass, bro. Trump's talks with South Korea. You know what? We confirmed a trade deal from what I've seen on the headlines. Again, my microphone just did it again and cut out. Again. I don't know why it does that. Come on now. Come on now. Come on down, Eve. Man, come on. Come on down. Come on down. No cross on the MACD yet. Riding that LSMA down. Slightly below the 1 hour LSMA. Maybe 102,000 or 100,000 is in play. Maybe we do need to get to that bounce, just like we got here and here. Maybe we need to get one here. I've mentioned it many times, you know, this indicator plays out. If it bounces at 100K, we're still good. Bull market is intact and we go higher. New all-time highs are likely. 100K loses support, we fall into this indicator and it starts to roll over. I say we're going into the bear market. I mean, it's really that simple for me. I think that's exactly what I'm looking at. Most importantly, weekly Bitcoin chart, weekly uptrend support. It's the main thing we're looking at. Holding that weekly uptrend. Right? That's what I think. You know, exactly, bro. Ben, exactly. Like the MACD should have already crossed. You know, it should have crossed. It should have crossed here, but instead we got a dump. Green fingers. I've had quite a few trades open longer than a day. I mean, I don't show all my trades on stream, but my best trades actually were, well, I take that back. My biggest gaining trades were actually short trades, short-term trades, very short-term trades, scalp trades. Basically, you're scalping at that point. But I would say I've had trades that I've left in for a week or 2 weeks that were also 200 to 400x leverage that came down like this close to being liquidated, but survived and ended up bringing me 300% gains. I've had a lot of losing trades too. I mean, I'm not going to sit here in front. I've lost a shit ton, man. Lost a shit ton of money trading crypto, bro. Come on, man. I've lost a bunch. But all it's going to take is one good trade. Now, I will say this. Managing your risk is very important. If you are here to try to learn about risk management, go somewhere else. Okay? I'm just going to tell you like it is, bro. If you're here to try to learn about risk management, this might not be the place or the show for you. Okay? And Sheriff S, yes, we definitely must lose to learn. You are exactly right. Don't trade with a stop loss. Simple. You know what? Girona money. Seriously though, because I feel like the market makers, they know that people are going to be less risky. They want to stop you out. They want to stop you out. No stop loss. Stop loss or stop loss or no stop loss. Because you know, it depends on how much capital. It depends on how much money you have on your account, right? I mean, if you have enough money on your account that your liquidation price is low enough that you almost just know for a fact that it's not going to go there, then okay. Exactly. Stop losses do not always help anyways. You know, I have taken big losses. I have. I've blew a few accounts.
Yep.
A couple of times, man. But lately, no, I've taken considerably smaller losses lately. But I'm also not gonna, you know, get up here and pretend like I'm some guru. I mean, just because you've been in crypto for a long time, or just because you've been analyzing charts for a long time, doesn't make you an expert trader. Trading for a long time doesn't make you an expert trader either. Aaron Greener, Ian, thank you guys. Adore, thank you for being here as well. All of you guys that have showed up to the stream today, I really appreciate you guys. Bitcoin holding 110.5K, ETH holding 3,900, Dogecoin, you piece of crap. You total piece of crap, bro. You know, I'm not gonna beat a dead horse, man. I'm not gonna beat a dead horse, but I might 75 exit though, just for the freaking revenge. Come here for revenge trading fund, okay? I see you degenerates out there. Come here for your revenge trading fund, okay? I am talking to an altcoin, bro. And it better not talk back. I swear to you, man. I swear to you. Dogecoin gets smacked. Okay? Diddy Mundo, what's good, bro? Welcome to the stream. Thanks for joining us. Oh my gosh, man. If this, y'all are gonna see me explode, man. I'm gonna explode on stream, okay? Aaron Greener says, I think we'll pump. Lowest market cap crypto is up almost 10% since FOMC. Well, I'm tempted, bro. I want to. I think I'm going to.
Mm-hmm.
Market order. Freaking $100. We put $100 on this thing. Why is it not showing me my liquidation price? Bro, what is happening? I'm gonna miss it. No, you piece of crap. What is going on with this? Why is it not showing my liquidation price? Okay, you piece of crap. Look, I'm gonna catch it at freaking resistance by the time I get the trade in, bro. Okay, hold on, man. Hold on. Because we might be getting ready to go. We might be getting ready to run, folks. If we don't roll over soon, then I think we're pumping. Okay, if we don't roll over soon, I think we're going up.
Mm-hmm.
Okay. Seriously, because this was this fake out. We were already due to roll over to the upside here, right? And that's why the MACD looks so jacked up, as Ben pointed out, because of this stupid market manipulation. Oh, it just makes me so angry that the price dipped to 18.7 and is now back at 19.4.
Nope.
Makes me want to spit at my freaking screen, bro. Makes me want to spit at it. And I don't mean a hawk to a either. I mean a. Oh God. Look, top long in 3, 2, 1. Green fingers, chill, bro. Listen, you know how many times I've actually successfully top longed and profited? Barely, by a hair, but I have. Listen, all I need to do is take $100 and turn it to $1,000. That's what I need to do, okay? Bro, I need to take 100 and turn it to 1K, okay? If I can take $100 and turn it to $1,000, will you guys be proud of me? Oh, I gotta get some new headphones, bro. I need to trade for a headphone fund. I need a headphone fund because these headphones are just hurting my ears, bro. I could backflip that 100 to negative 500, bro, because I'm cross margin. I'm cross margin. I'm using the whole account. But again, it's whatever you're willing to play with, man. Whatever you're willing to throw in the pot, right? GG, you're not already subscribed, bro? You're gonna make me trade to earn your subscribe? To earn your follow, I have to trade. I have to 10x $100 to earn a follow. Oh my god, it's getting steep out here. Crypto YouTube land is not like it used to be, bro. It used to be a price prediction video was good enough, man. I could get on here and do a price prediction video and you guys be happy. Damn, nowadays it's like if you ain't trading, if you ain't making tens of millions of dollars every single day trading, then you are worthless. Keith K, man, I appreciate you showing up to the stream today. I really do. Thank you for your support. Hassan says crypto is a massive scam. Time will prove. I've always thought that. Even though I fell in love with Bitcoin and cryptocurrency. I've always thought that as a possibility, so I somewhat agree. Brian Giddens, welcome to the stream. Crypto has become a 24/7 liquidity hunt. I feel like leverage controls price more than anything. And it will continue to follow those leveraged liquidity blocks, whether it be up or down. The leverage, just like we've seen with the liquidity dump, with the liquidation, over leveraged positions, more leverage now in the market than ever before. I mean, I don't know if you guys remember whenever I was partnered with a couple of other exchanges back in the day, but they offered, what was it, like 1400x leverage or something? I can't even remember, bro. It was ridiculous. 1700x leverage, I think it was over 1000x leverage. But I can remember freaking throwing $50 on a trade, okay, with 1700x leverage or whatever, and flipping $50 into like $300 in freaking minutes, bro. That was fun. Those were good times, man. Of course, the market was extremely bullish then. You could have pretty much longed anything at that time when I was doing that and made money. But what better time to use that kind of leverage, What is up, Nicole? Welcome. Brooks, what is going on? Dilip, welcome to the stream, you guys. Thanks for being here. Thank you, guys. I am so tempted. We're at previous support, though. We broke